Hey everyone, it is Julie here with TipRanks, and today we're taking a look at the two newest ratings from a top-ranked analyst. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two new buy ratings coming in from a top 10 analyst in the tech sector. And what's interesting is that a lot of the rest of Wall Street does not agree with these buys. So we're going to take a look at these companies, what it is that they do, what our top analyst thinks about the stock, and how the rest of the street weighs in. Of course, you can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Now let's take a look at our top analyst first. The top analyst that we're taking a closer look at today is Quinn Bolton from Needham. He's currently ranked number 7 out of over 8,600 Wall Street analysts. His 5-star rating comes with a success rate of 68% over the past year, with an average return of nearly 33%. And just today, Quinn reiterated buy ratings on two tech stocks. The first that we're going to take a look at is a company called Qorvo. Their stock trades under the ticker QRVO, currently priced at $104 after gaining 4.5% today. Now, they've certainly seen some ups and downs this past year, overall down 2%, including a decline of 1% over the last 6 months, but they've been climbing back, gaining 22.5% in the last 3 months. Qorvo is a North Carolina-based chip designer and manufacturer, and they have their hands in all of the leading-edge high-tech markets. Their core business includes top-end radio frequency and power chipsets that provide solutions in a range of applications from aerospace and defense to IoT and mobile networking and infrastructure and power management. These are expanding niches that combine high demand with exacting specifications requiring quality and execution. In recent years, Qorvo has also been moving into 5G technology. The Qorvo stock is gaining today as the company just reported their latest quarterly earnings in the after hours last night. They came out with both an earnings and revenue beat, plus another exciting announcement. They announced that they had signed a definitive agreement to acquire Anokiwave, which is a supplier of silicon integrated circuits for intelligent active array antennas for DNA, SATCOM, and 5G applications. And that news accompanied their Q3 earnings report, where they reported earnings per share of $2.10, coming in well ahead of the anticipated $1.66 per share, and revenue of $1.07 billion grew 44% year over year and exceeded their high point revenue guidance by $49 million. Following that earnings report today, we have quite a few analysts reiterating their price targets on the stock. And of course, one of those is a buy rating from our top analyst, Quinn Bolton. With his buy rating and a price target of $125, Bolton highlighted the company's 4th consecutive quarter of outperformance. He said that their confidence in Qorvo's strategy is further bolstered by the management's outlook, which suggests a continued increase in market share with its largest customer over the coming 2 years. Another factor contributing to the buy rating is the anticipated growth in the Android market segment by the 4th quarter of the coming year as user demand begins to strengthen. But not all of Wall Street agrees with his recent buy rating. In fact, out of the 10 reiterated ratings that the Qorvo stock has gotten today, there's only one other buy rating besides Quinn's. The rest are all coming in as holds, and there's even a sell. One of those hold ratings comes from an analyst at Goldman Sachs. They said that despite the positives, the hold rating suggests that the potential for stock price appreciation might be limited based on the revised price target. There are concerns about unpredictable nature of the smartphone market, which could impact their future performance. The Qorvo stock has 16 ratings overall, currently coming in as a hold. That is based on 4 buy ratings, 10 holds, and 2 sells. The average price target of $111 would be an upside of 7.3%, but we do have a decent range of price targets here. Looking at the last 10 ratings all coming in today, you can see that range. Here we have Quinn Bolton's rating from Needham with an upside of over 19%. That's not even our high-end rating. This one back from December from Morgan Stanley comes in with an upside of 28%. And on the low end, with quite a spread there, we have our sell rating with a downside of nearly 20% and a lot of holds coming in between. And the second stock that our top analyst just reiterated a buy rating on is MaxLinear. Their stock trades under the ticker MXL, currently priced at $18 per share. You can see that they have had a tough go this year. They're down 56% in the past year. Although they have climbed up 15% in the last 3 months, they've fallen 13% just today. MaxLinear is a fabless semiconductor company. You'll find MaxLinear products at the heart of technologies and devices all around you. With a focus on low power and efficiency, their engineering innovations help drive 5G wireless infrastructure, power the Internet of Things, and enable robust and reliable communication. They provide radio frequency, high-performance analog and mixed-signal communications systems-on-chip solutions, wired and wireless infrastructure, and industrial and multi-market applications worldwide. As you saw, the stock is tumbling today, and that is in relation to their earnings report that just came out last night. They did have mixed results, with earnings being largely in line with expectations, revenue dropping, but more disappointing was them guiding lower for their Q1. Q4 earnings per share came in at 1 cent, which was ahead or in line with expectations, while their net revenue of $125.4 million did fall short of estimates, but also declined 57% year over year. Management did say that they believe 2024 will be the start of an exciting period of growth and opportunity for MaxLinear, that market headwinds of the past year in broadband and connectivity are likely to become tailwinds over time when customer inventory rationalization winds down and incentive programs begin to provide new market stimulus. But for the first quarter, they are guiding for revenue between $85 to $105 million, and that was well below the $121.8 million that analysts had been anticipating. But even with that lower future guidance, our top analyst Quinn Bolton did reiterate a buy rating on the stock. And he says that there is anticipation of a rebound. It is expected that government funding will align with service provider spending in the second half of the election year, which could lead to a surge in demand for MaxLinear's offering. Despite a current slowdown in backhaul demand and adjusted financial estimates, the anticipated revenue and non-GAAP earnings per share for the calendar year 2025 remain robust. Wall Street isn't quite as divided on the MaxLinear stock as it was on Qorvo. Out of the 8 new ratings that have come in today, we have 4 buys and 4 holds. But we do still have quite a range of price targets if we look at our detailed list here. So we do have Quinn Bolton's rating coming in at $25, which would be an upside of nearly 39%. And there's several price targets around the same. On the high end, we actually have Stifel Nicolaus here with an upside of 44.5%. And on the low end, a hold rating from Northland Securities with a downside of 16%. So there we have 2 tech stocks, both picking up a buy rating just today from a top 10 analyst, but with some differing opinions from the rest of Wall Street. So I'd love to hear from you guys and what you think of these 2 companies. Do you agree with our top analysts, or are you a bit more hesitant like the rest of the street? Let me know your thoughts in the comments down below. I always love hearing from you guys. Of course, keep in mind that these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to. So please always make sure you do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.